Welcome to the Deep Dive. Today we're diving straight into Budweiser APAC's 2024. We've got the annual report here.
That's right. And the big picture, it's really a story of two halves, maybe even three.
Yeah, it definitely looks like a mixed year. Seems like China had some real struggles.
It did. Significant hurdles there. But then you contrast that with really strong performance, particularly in South Korea and India.
Interesting. So navigating very different market dynamics across the region.
Exactly. And we've gone through this 2024 report, the official one, to, pull out the key insights.
Right. What's the mission for this deep dive then?
Well, we want to unpack the crucial business and financial stuff, how the different segments did, the main financial numbers, what they're doing for shareholders, and the outlook.
But keeping it focused, right? Avoid getting lost in the weeds.
Absolutely. Just the essentials you need to know.
Okay, let's start with China then. You said turbulence. Unpack that for us.
Yeah, China was definitely tough in 2024. The report talks about weaker consumer sentiment generally.
Which we've seen across different sectors there.
Exactly. And a softer overall industry for beer. Plus, crucially, less spending in places like bars and restaurants, the on-premise channel.
And Budweiser APAC has a pretty significant footprint there, don't they?
They do. So that hit them quite hard. You see it clearly in the numbers, volume, and revenue, both down by 13.0% in China for the year.
Wow, 13%. That's substantial.
It really is. It highlights how sensitive they are to that on-premise spending when the economy feels a bit shaky.
So what's the plan? How do they aim to, get back on track in China for 2025?
Okay, so their strategy is about reconnecting with market share growth. They're focusing on what they call a winning brand portfolio and improving their premium route to market.
Meaning?
Well, specific things. They're putting a lot of focus back onto the main Budweiser brand itself.
Okay.
And pushing growth in what they term core plus innovations.
Yeah.
Think new things like their zero sugar offerings. That seems to be a big trend.
Zero sugar is popping up everywhere.
It really is. Yeah. And they're also pushing premiumization for people drinking at home. They believe their premium portfolio gives them a real edge here.
Makes sense. People might cut back on going out but still treat themselves at home. Now, South Korea, you said that was a completely different picture.
Oh, night and day almost. South Korea was a real bright spot. They hit their highest total market share there in at least 10 years.
Really? What drove that?
Mostly the strength of the Cass brand. It's huge there. We're talking double-digit revenue growth.
Double-digit, wow.
Yeah, and importantly, high single-digit growth in revenue per hectoliter.
So getting more money for each unit sold.
Precisely. They put this down to, quote, ongoing revenue management initiatives. Basically, smart pricing and promotions, and a good mix of brands and packaging that people were buying.
So strong local brand, smart management.
Seems to be the winning formula there. And it definitely flowed through to profitability.
Right. The bottom line must have looked good.
It did. Their EBITDA, that's earnings before interest, taxes, depreciation, and amortization, saw a substantial expansion in South Korea. The margin improved significantly, too.
And that wasn't just selling more, was it?
No, it was a combination. Good commercial performance, yes, but also that effective revenue management, getting a bit of help from lower commodity costs, tailwinds, they call them, and just being efficient with their costs.
Okay, so looking ahead to 2025 in South Korea, what keeps the momentum going?
They see several drivers. Continued investment in Cass, obviously. That's core.
Makes sense.
But also expanding consumer participation through innovation. They actually gave some specific examples, which is interesting.
Oh, yeah. Like what?
Cass Light Zero Sugar grew over 30% and became a top 3 beer for drinking at home.
30%? That's huge growth for zero sugar.
It is. Cass Coral Point Zero, the non-alcoholic version, also grew over 30%, and Cass Lemon Squeeze sales almost doubled. So these innovations are clearly landing well.
Seems like they're hitting the right notes with new products.
Definitely. Plus, they see more room for premiumization. They note South Korea is still under-indexed on premium beers compared to other developed markets.
So potential to trade consumers up.
Exactly. And one more thing, digital. Their B2B platform, BEs, is gaining traction. It accounted for 24% of their net revenue in December 2024.
Right. Digitizing those sales channels. Now, India, another growth story.
Yes, India continues to perform really well for them, especially at the top end.
The premium and super premium stuff.
That's it. That revenue from that segment grew by almost 20%, both in Q4 and for the full year.
20% is very strong.
It is. And get this, Budweiser's market share in India has more than doubled in the last 5 years.
Doubled. Wow.
Yeah, India is now a top 4 global market for the Budweiser brand itself. And they're continuing to expand where they sell Budweiser within India.
So strong growth in premium, expanding reach. Okay, what about the rest of APAC East, excluding South Korea?
A quick mention there, in Q4 2024, volumes are up 8.5% and revenue up 7.8%.
Okay, positive.
But revenue per hectoliter dipped slightly by 0.6%, which they pinned mainly on dynamics in that specific APAC East region.
Gotcha. And across all of this, there's a focus on tech.
Yes, they make a point of highlighting that, leveraging technology to boost their commercial side, sales and marketing, and create value generally.
All right, that gives us a good feel for the different regions. Let's pivot to the overall financials for 2024. What are the key numbers?
Okay, headline numbers. Full year revenue was $6,246 million US dollars.
Okay.
That was actually down 7.0% organically compared to 2023, which was $6,856 million.
So a drop in revenue. What about volumes?
Volumes were also down. Total was 84,811,000 hectoliters for the year. That's an organic decrease of 8.8% from 2023.
So selling less, making less revenue overall. How did that impact profitability? Gross profit?
Gross profit came in at $3,147 million, down from $3,453 million the year before. But interestingly, the gross margin held steady.
Oh,
Yeah, 50.4%. So the percentage of revenue left after the cost of making the beer was stable.
that's pretty resilient. What about EBITDA, that normalized figure?
Normalized EBITDA was $1,807 million. That's down 6.3% organically from $2,023 million in 2023.
Okay, down, as you'd expect, with lower revenue.
Yes, but here's the fascinating part. The normalized EBITDA margin actually expanded slightly.
It did, even with revenue falling.
Yeah, it went up to 28.9%. That's a 21 basis point increase from 29.5% in 2023. Sorry, I think I misspoke the 2023 number earlier. It was 29.5% in FY23, so the 28.9% in FY24 is actually a decrease of 60 basis points. Let me double check that.
Okay. Let's clarify that margin point.
My apologies. Let me reread that section carefully. Yes. FY24 normalized EBITDA margin was 28.9%. FY23 was 29.5%. So that's actually a decrease of 60 basis points, not an increase. The Q4 margin increased, which might be where the confusion came from. Let's correct that.
Okay, thanks for clarifying. So normalized EBITDA margin decreased slightly overall for the year to 28.9%. But you mentioned Q4.
Right, let's look at Q4 specifically. Volumes were down quite a bit, 12.7%, and revenue down 11.0%.
Steep drops in the last quarter.
Yes, but revenue per hectoliter grew 1.9% in Q4. And this is key. Normalized EBITDA margin in Q4 increased by 84 basis points, even though EBITDA itself decreased by 7.2%.
So they managed costs and pricing well towards the end of the year, despite lower volumes.
Exactly. That Q4 margin expansion is a positive sign, likely helped by those strong performances outside China and cost control.
Makes sense. And further down the profit line, EBIT and net profit.
Normalized EBIT, earnings before interest and taxes, fell 10.5% to $1,160 million. The margin there was 18.6%, down from 20.0% in 2023.
Okay.
And profit attributable to equity holders was $726 million, down from $852 million. The normalized profit figure was $778 million, down from $917 million.
So profits definitely impacted by the overall volume and revenue decline. What about the balance sheet, financial health?
We describe it as a sound balance sheet. They ended the year with a net cash position of $2.9 billion US dollars.
Still a lot of cash on hand.
Yeah, it's down about $274 million from the end of 2023, but still a very strong position.
Yeah.
Suggests good liquidity and financial management. We don't have the full cash flow details here to talk specific free cash flow numbers, though.
Understood. Okay, let's talk shareholder value. What are the plans there? Dividends are usually top of mind.
Absolutely. And there's positive news here for shareholders. The board is recommending a final dividend for 2024 of $750 million total.
Okay. And per share.
That works out to 5.66 US cents per share. And the key point is that's a 7% increase compared to the 5.29 cents they paid for 2023.
A 7% raise in the dividend despite the challenging year overall. That's a statement, isn't it?
It signals confidence from the board, I think. Of course, it still needs shareholder approval at the AGM, the annual general meeting.
Naturally. What's their official policy on dividends?
The current policy is to aim for a dividend payout of at least 25% of their consolidated profit attributable to equity holders, after excluding any sort of exceptional items.
Right, a minimum target. And did they do any share buybacks in 2024, repurchasing their own stock?
The report is quite clear on this. It states they held no treasury shares as of December 31st, 2024.
Meaning no buybacks during that period.
Correct. Their focus for returning cash seems to be squarely on the dividend right now.
Okay, so let's try and bring all this together. Assessing the business moving forward, based on this 2024 report, what's the overall picture?
Well, look, it's clear they're navigating a really complex landscape in Asia. The challenges in China aren't going away overnight, with the macro economy and consumer shifts.
But they do have a specific strategy there.
They do. Focused on regaining share, pushing the premium brands, adapting to how and where people are drinking. It's about execution now.
And outside China, the growth areas.
South Korea clearly has strong momentum. The strategy seems to be working well there. Brand strength, innovation, the premium push, that looks set to continue.
And India.
India also looks very promising, especially in those premium segments. Its growing importance within the Budweiser global picture is really notable. It's becoming a major market.
So it really highlights the importance of having that geographic diversity.
Absolutely. Strengths in some areas helping to offset weaknesses elsewhere. It's classic portfolio management, but across countries.
And we should probably mention their sustainability focus again, too.
Yes, definitely. They reiterate their commitment to ESG, environmental, social, governance goals. They mention their 2025 targets, like for renewable electricity and cutting greenhouse gases.
And the longer-term net zero goal.
Right, net zero across the whole value chain by 2040. This stuff is increasingly important, not just for the planet, but for how investors and consumers see the company's long-term value and resilience.
So summing it up, a nuanced outlook, challenges remain, but there are clear bright spots and strategic levers they're pulling.
That's a good way to put it. They're managing the current headwinds, particularly in China, while investing in growth elsewhere and, significantly, increasing returns to shareholders via that dividend. Cautious optimism, perhaps?
Okay, so for everyone listening, the key takeaway from Budweiser APAC's 2024 seems to be this picture of contrasts. Real strength in places like South Korea and India helped balance out significant challenges in the crucial China market.
They've got a clear strategy for 2025, heavily leaning into premiumization and adapting to consumption trends, plus that commitment to shareholder returns with the higher dividend.
It really underscores the dynamism and the difficulty of operating across the diverse APAC region.
Absolutely. Which leads us to a final thought for you to chew on.
Go on.
Given these very different results and strategies across Budweiser APAC's key markets, what does this tell us more broadly about the future challenges and maybe opportunities for massive global companies trying to succeed in such varied Asian economies and consumer landscapes?
That's a great question. How do you tailor global strategies for such specific local realities? Definitely something to ponder.
If you want to dig deeper, the full Budweiser APAC annual report is out there, or you could explore some of the broader beverage industry trends we touched on.
Thanks for tuning in to this deep dive.